Hello, everyone, and hope you're doing well this hour. And we'll be with you with the global economic outlook for the week ahead, which is going to be the week 40 in 2025. The week, which is the last days, will include the last days of September and the first days of October. As always, let's have a short review on what happened just previous week and last week, and then we can go forward and check the week ahead. Last week, the main market focus was on the U.S. Inflation data, where the personal income and spending, we saw some slow increase in the personal income and spending, but inflation's personal PC price index and core PC price index, they were in line with expectations. Core PC price index with 0.2% monthly increase didn't change that 2.9%, but however, the PC price index with 0.3% monthly rise, it's increased to 2.7% from previous 2.6%. Generally, the data which we had here is showing that now the data that we have here is showing that the inflation is still sticky in United States. Even though we have some slow downside, but this sticky inflation can still continue and can get the concern, especially with the higher income and spending. This higher income and spending means that the demand is still continuing in the market, and with the higher demand, we can expect the inflation to stay still higher as the market still need these services and products. That's why the producers and the providers also they have no reason to slow down, cut the rates, cut the prices actually. On other economies, at the same time, we had initial jobless claims falling to 218,000 in the United States, which was an amazing number in showing that the market is, the labor market is still strong and is still doing well, while the 4 weeks average also fell to 237,000. Generally, the labor market data was fine, while the housing market also is increased. Between the other economies, Swiss National Bank hold the rates at 0%, while the Mexican Central Bank cut the rates by 25 basis points to 2.50%. That's what generally happened in previous week, and we had some PMI numbers, especially mostly from European and US economies as well, no matter from all of them. S&P publishes the PMI numbers, which show that the service sector, some in European economies had slightly improvement, even thought the general numbers, they were not so good, but with a slight improvement or sometimes weaker than previous months, but better than expectations. But manufacturing sector, especially in United Kingdom, even in the United States as well, the manufacturing sector, they missed expectations and they were less than previous months as well. But generally, the economic activities that we had, the economic data that we had from the Europe, they were weaker than expected, while in the United States data, they were not so bad, and they're confirming that the U.S. economy is still moving fine. Looking ahead, the market focus will be for sure on the U.S. labor market data, where on a Friday we're going to have the NFP numbers. However, before that, we have too many other data to watch. Starting on a Monday, Monday we will not have too much data. I mean, the economic data, economic calendar wouldn't be so busy, but we will have too many speeches during this day. These speeches that they're going to tell us much more and more about the central bank's policies and the possible policies, especially what you're going to think, what you're going to decide. But on Tuesday, we're going to have too many important data from China. We're going to have the manufacturing and non-manufacturing PMI numbers, where we are expecting to see some progress in the data, some progress in manufacturing sector and in the service sector as well. Reserve Bank of Australia will have the monetary policy meeting, where we are expecting to see the holding the current rate at 3.60%. RBA cut their rates by 25 basis points in the previous meeting, same thing that the RBA and ZIP they did. But for this meeting, Reserve Bank of Australia, and also next week, which Reserve Bank of New Zealand also, they're going to have the central monetary policy meeting. Both are expected to hold the current rates, not going forward, because the inflation is showing some progress, and they say that probably if we cut the rates just like right after another on all the meetings, probably we're going to have inflation to be increasing. That's why the central banks in this area, they're going to be a little bit more cautious before cutting the rates forward. Uh, then we're going to have some data from the Europe, especially the retail sales from the Germany, which we're expecting to see some progress after 2 months falling down, while the unemployment rate also supposed to stay unchanged at 6.3%. CPIs from the from French and Italy, they will meet the expectations and under 2% ECB's target, while in Germany's inflation also supposed to stay unchanged around 2.2%. That's the thing about the German, a little bit difference about the German's economy against other European economies. But on Tuesday, the market focus on the US season will turn towards consumer confidence, where is expected to see around 94, while the GLT is supposed to show around 7,100,000 vacations. I mean, the opportunities, the job opportunities, which is not filled. That's going to be slightly less than previous month, less than the July. But however, generally the data, these numbers means that for each US unemployed person, there is less than one job opportunity, which it was more than 1.8% year ago. 1.8 actually year, not 8%. On Wednesday, again, another busy day where we're going to have from Japan, we're going to have the Tankan larger, or I mean, the general indexes, which is showing the economic activities in a large industries and a large businesses. We're expecting to see some progress in the third quarter expectations. But in Europe, in European time, the market focus will turn towards European inflation data. Eurozone inflation is supposed to increase by 0.1 and 0.2% for the headline and core inflation, which means that the headline inflation will stay at 2.2% and core PC price index supposed to stay at 2.3%. No change. We don't expect any changes. Just inflation is around 2.2%, 2.3% for European Central Bank. But at the same time, we know that with this data, with this inflation, while economic activities is low, they're going to be more chance if we don't see the inflation is increasing, just like around these numbers. We're gonna have we should give them more chance for European Central Bank to cut the rates by another 25 basis point in December meeting, sorry, which means that the European Central Bank's target rate will slow to 1.75% by year. And this is the expectations, not the exact what's gonna happen. From the United States, we're going to have the ISM manufacturing data on Wednesday, which is expected to show that the U.S. manufacturing sector to slightly increased activities from 48.7 to 49.2, but still under 50 expansions area. Thursday, the market focus will be on in US season, especially because in Europe season we don't have too much data to watch. In Asia, we're going to have the trade data from Australia, but in United States, initial jobless claims, which is fell to 218,000 previous week. This week is expected to slightly increase to 220,000, but still that's going to be very low number, which means that the labor market is still strong in United States despite some cooling in activities that we had in the previous weeks. Friday, where the market focus will turn towards US labor data, but still we're going to have the composite service PMIs and the composite PMIs from European as well, while the European Producer Price Index PPI also supposed to show 0.2% monthly growth and annually annually 0.2% growth, while on the monthly scale, Producer Price Index is supposed to stay flat. Service sector, the service PMIs and composite PMIs wouldn't have surprise change in the market, while the same numbers we're going to have from ISM data from the ISM from the United States, where we're going to have the US ISM service PMIs and composite service PMIs almost unchanged. We don't expect any surprise there. However, the focus of the market, labor market data, where we're expecting to see between 39 and 45,000 newly created job, only to 39 and 45,000, around this number, not much. not much. That's the market expectations, which means that the US labor market is slowing growth. At the same time, unemployment rate is supposed to stay unchanged at 4.2, 4.3%, which means that now probably we can see the effect of the immigration policies of the Donald Trump administration. While with the lower making a job, the unemployment rate is not changing too much. 4.3%. That's the highest unemployment level in the recent years, but at the same time, it's not such a big number when you especially compare with the European unemployment rate at 6.3% and 5.3% in China. Just like the numbers are not concerning, but still, yeah, it's not good. It's not very good, but it's not telling that we have a crisis in a labor market. Yeah, that's the market condition, and probably we're gonna see the 0.3% month earnings growth, average earnings, which on a monthly scale, and annually at 3.7%. Weaker than expected, weaker than normal, should be around 3.9 and 4%, but still, yes, but weaker, but still it's not, we cannot say that they are so weak. As a market reaction, the dollar index, which increased about 98 after falling towards 96, right after the Fed meeting. Recovering the dollar index depends too much on the US economic data, which they were better than expected. They showed that the US economy is moving forward. It's fine, especially in the labor market data, which we had, especially in the manufacturing zone, especially in the housing markets. GDP, which increased by 3.4%, 3.8% in the second quarter in the last data that we had. With all these numbers, they say that the US economy can handle the hires for longer, which means that right now we can talk about the US dollar index between 97 and 98 for the week ahead, as well, especially with the labor market data that we are expecting to see some progress and getting stronger, a little bit stronger numbers at the weekend, at the last day of the week on Friday. This stronger dollar index can slow down the gold uptrend, gold bulls, but it doesn't mean that they can change the market trend, because at the same time in the stock market we are expecting to see some pressure on the on the stock prices as the higher for longer expectations, and just like the idea that the US economy is that much strong to handle these levels of the rates, that can put the pressure on the stock markets just a week before a week before earnings reports to be started. So that's why some of this money coming out, they're going to go towards safe haven markets, especially the gold. That's why we are not expecting to see the gold price change the direction. But the uptrend with the overall market condition that I explained, uptrend supposed to be slower, and probably we can see some correction as well, but the trend is not going to be changed. On the energy market, still the markets depend too much on not on economic data, too much is depend on geopolitical tensions. Even though the US inventories increased, US Baker Hughes, we know that the production is increasing. Sorry, the message came some. Yeah, as we know that the US, sorry, just like the message came in, just I lost the focus. We know in the United States, we know the production increasing, we know that the inventory is increasing, and still the price is also increasing. All this data shows that the energy market is dependent too much on geopolitical tensions right now, not too much on the economic data. Going forward, looking at the other data, as mentioned about the stock market, same as the S&P 500, we can see the same reaction in the Dow Jones and in the Nasdaq and the Dow Jones as well. The market is we're expecting to see some correction in the market, in the stock market, as the market is now counting on higher for a little bit longer, and they believe that the US economy is still strong to handle these rates. On the cryptocurrency market, Bitcoin is losing the ground after the options expiration that we had in September 19, and this data shows that now with one, it's like huge numbers of the buy options, they lost the money. I mean, the buyers. But anyway, this liquidity out of the went out of the market and supporting the downtrend and putting the pressure on the downtrend. Too many people, they're losing their faith on what happened. That's why we can expect the pressure on the cryptocurrency market. Even thought on the other side, while the expectations from in the stock market is the downtrend and this cutting the cash from the stock markets, may some of that goes towards stock crypto market, and that can increase the demand. That can increase the demand for the cryptocurrencies as well. So the generality is that means we can expect a downtrend in the cryptocurrency market, but shouldn't count on that too much. Yeah, that was the data, what happened last week and what we are expecting to see in the week ahead. Hope it was useful for you. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.